Hello, I'm Craig Brelsford, and welcome to another episode of Small Stocks, Big Money. For those of you new to the show, RedChip is an investor relations, media, and research firm focused on emerging growth companies. Our unique platform combines global multimedia with traditional investor relations, reaching investors around the world. Now, today's show features interviews with executives of two public companies. First up is Knightscope Incorporated. Knightscope is a public safety innovator headquartered in Silicon Valley and on a long-term mission to make America the safest country in the world. Knightscope builds AI-driven technology to help protect lives, property, and infrastructure. We'll learn more when we speak with the CEO later in the show. Up next is Alliance Entertainment. Alliance Entertainment is the global leader in physical media distribution, acting as the crucial gateway between major content producers and retailers. The company partners with nearly every major film studio, music label, and video game maker, including Disney, Sony, Universal, Warner Brothers, Universal Music, Sony Music, Warner Music, Microsoft, and Nintendo to distribute their products to retailers worldwide. We'll learn more when we speak with the CEO later in the show. Before we dive into our first interview, let's take a moment to recognize some of RedChip's top performers in 2024. Among them, RedCat, up an incredible 1,293% in 2024. Alliance Entertainment, soaring by 842%. Gorilla Technology, which gained 250%. And Nova Minerals, up 149%. These companies have demonstrated the immense potential of the small cap market. Now, let's move on to our quote of the week. It comes from the book, Small Stocks, Big Money. Do your homework. Understand companies you invest in forwards and backwards. This quote comes from Charles Diker of Diker Management, and it is featured in Chapter 8 of Small Stocks, Big Money, a book of exclusive interviews with some of the biggest players in the microcap space. Get a digital copy on Amazon today for just $18. Now let's get started with our first interview today with Knightscope Incorporated.
Hello, we're here with Billion Santana Lee, Chairman and Chief Executive Officer of Knightscope. Bill, thanks for being with us today.
Hey, Craig, greetings from Silicon Valley. Thanks for having us.
You're welcome. Knightscope's mission is to make America the safest country in the world. How does your technology uniquely position the company to achieve that ambitious goal?
So I think the best way to do that is to build some unbelievable new technology for officers and guards to be able to do their jobs extremely effectively with a unique combination of combining autonomy, robotics, AI, and electric vehicle technology into new set of capabilities for them to have their eyes, ears, and voice on the ground in multiple locations. Robots don't sleep, they're not texting, they're operating literally 24/7, 365 across the country. And that gives them new tools for them to have unprecedented capabilities literally at their fingertips.
Bill, you've identified a $230 billion total addressable market. Can you break down the most promising segments and where Knightscope is seeing the strongest traction today?
I think the easiest way to think about it is wherever an officer or guard might be patrolling across the country is a wonderful opportunity for Knightscope to be able to better secure and protect the places people live, work, study, and visit. And that could include anything from healthcare to corporate campuses, schools, manufacturing facilities, logistics facilities, a lot of commercial real estate. Again, anywhere outdoors, you might see an officer or guard patrolling. And then remember, there's a lot of them. There's about 1.5 million security guards across the country, about a million law enforcement professionals, but they need to run 24/7. And so you can't triple shift a human. You can do that with a robot. And that leaves only maybe 600,000 humans trying to secure 332 million Americans across 50 states with the technological equivalent of a number two pencil and a notepad. And what we intend to do is give them, again, new unprecedented capabilities for them to have almost superhuman capabilities at their fingertips.
Bill, I am sure that investors are going to ask, why Knightscope? How are you going to succeed in security technology a place where so many companies have failed?
I think investors typically look at three risk profiles. One is, do you have a market risk? I don't believe the market for crime is going to collapse tomorrow, right? It's not the equivalent of like a station wagon or a flip phone. Not everyone's just going to wake up tomorrow morning and start behaving. So I don't believe there's a market risk, and we have a recurring revenue business model for a recurring societal problem. And we've already generated tens of millions of dollars of revenue to prove that opportunity exists for us. I think second, you're looking at technology risk. So there, I think, been about three major corporations and three funded startups that have attempted to do what we're doing, and they've all either gone bankrupt, failed, or given up. And I think we've got now the technology working. It's taken quite some time to get all this complex capabilities operating in the field, but now we've operated, well over 3 million hours fully autonomous across the country in multiple time zones through multiple winters and summers. So I think we've taken a good majority of the technical risk out, and all the improvements going forward is basically cash, people, and time. We know how to get from A to B. And then what's left is execution. And that's a different way of asking, like, do you trust the management team to do what they said they're going to go do? This April 4th will be our 12th year anniversary. I live here in Silicon Valley. There's about 22,000 startups. 95% of them fail. The statistical probability of one starting a company, getting it funded, growing it, and taking it public and continuing to grow is abysmally low. But we've been able to beat those odds. And I think that same management team that willed the company into existence is basically the same management team today. And investors can be rest assured that we're really focused on long-term shareholder value and know how to execute.
Sit nicely into this next question about finances. Bill, you have significantly improved Knightscope's balance sheet and capital structure over the past several quarters. Now, how do those changes position your company for sustainable profitability?
So I think one of the greatest things that we did the last 12 months is really go up and down the income statement and the balance sheet and take anything that's either toxic, too costly, or the like out. And the impact of that will start showing up in the coming quarters. But starting from just from a people standpoint, we brought in an all new board of directors, brought in a new CFO, took about a third of the management team out to get a lot more focused and better decision making. Stood up a couple new departments, consolidated facilities, raised some capital, and continuing reducing our cost and increasing our revenue. So I think we have a very strong foundation for us to now scale the business up, and it's certainly an opportunity.
Bill, you talked about crime not going anywhere anytime soon. You talked about recurring revenue. I want to know, what percentage of your revenue do you expect to be recurring in the next few years?
Oh, that's a great question. So we have both from our emergency communication devices, single point transactions where the client takes possession of the device, but there is some ongoing revenue recurring that goes with that, with some maintenance and support and a bit of software. On the autonomous security robot side, it's 100% recurring, so everything's included. And it's extremely attractive for a client because an off-duty law enforcement officer is about 85 bucks an hour. A security guard, depending on what you want him or her to do, is 15 to $35 an hour. Our highest price point with all the bells and whistles is about $11 an hour. So you're going to be having a real difficult time finding a better value there. I think over time, we're going to be moving from maybe perhaps half of the portfolio being recurring to getting closer to 80, 90, 100%. Again, we want to focus on a recurring revenue business model for a recurring societal problem of crime.
You received an ATO, that's an authority to operate from the federal government. How does the ATO impact your ability to secure large scale government contracts?
So one of the greatest things with this authority to operate, it took us, let's see, more than 4 years, a couple $1 million to get through a little bit of a horrific cybersecurity review process with the U.S. federal government. Our sponsor through that has been the U.S. Department of Veterans Affairs, and we were able to originally get the ATO for the VA only. But now we hold an ATO for all federal agencies and departments. So that allows us to basically add billions of dollars to the total addressable market. So you want to think about Customs and Border Protection, the TSA, the GSA manages nearly 10,000 federal buildings. Federal Protective Services has maybe about 13,000 officers and guards protecting those same buildings. You look at U.S. Postal Service, frankly, looks like a logistics company, right? So if you go through the entire thing, our initial analysis, if we were to, automate a good portion of the federal government's public safety, law enforcement, security operations, is probably nearing $10 billion of opportunity in budget reduction. So I think there's a wonderful opportunity, and frankly, we're the only one with an ATO that provides this kind of technologies. So that also gives us a bit of a moat.
Want to focus on that $10 billion you just mentioned, Phil. Walk us through the cost savings. Give us some more detail there on the efficiency gains that your solution would provide.
So I think probably the simplest thing is just, you can't triple shift a human, right? These robots can run 24/7, so you only need to get one of them. If you want to run a 24/7 post, let's say you're FEMA and you got to guard the warehouse, right? You actually need to hire 4 people if you want to run that 24/7 because, humans need to sleep, take vacation, breaks, etc. And that's going to be a pretty penny when you start thinking about, a few $100,000 in total with all the associated insurance and liability and payroll costs, etc. And we're able to remotely monitor and provide a human in the loop to remotely monitor these areas using this technology and be a lot more efficient. And this is not necessarily to use the media talking point that the robots are coming to kill everyone and take everyone's job. The more thoughtful way to think about it, the country doesn't have enough officers and guards and is woefully failing at the mission of keeping everyone safe. And I can say that because, you can look at the negative economic impact of crime every year is about $2.6 trillion negative economic impact. There's a violent crime that occurs every 26 seconds and a property crime every 5 seconds. So I can assure you it's not working. So the idea here is not to get rid of new officers or get rid of guards, is to redeploy them to where you would need a human to do the enforcement, to do the decision making, but you need to get the machines to do the monotonous, computationally heavy, and sometimes dangerous work where a human really shouldn't be patrolling. And therein lies the opportunity.
Analyst coverage bill targets ranging from $16 to $32. What is the market missing that those analysts are seeing?
I think we're certainly excited to have our first 3 analysts covering the stock. I think they're understanding where we're wanting to go. They also understand this very difficult technology does take time and money to get built out, but now we're positioned to scale up the company, and they see that given the market levels right now, there's a significant opportunity in their eyes for investors to take a look at Knightscope more carefully. I think it comes down to, you've got an innovative set of technologies. You're at the intersection of 4 really hard ones: autonomy, robotics, AI, and electric vehicle technology. This is the culmination of actual physical AI in the real world with real clients generating real revenue. And you're going to have a hard time finding a comparable. And so if you're uniquely positioned in the marketplace, working on the nation's most difficult and pressing problem, I think not only is this going to be invaluable for society, once we make the U.S. the safest country in the world, it's certainly going to be just as invaluable for our shareholders.
Bill, you really covered it. Thanks for being with us today.
All right, and don't forget, robots will be everywhere.
Now, to get more information on Knightscope Incorporated, visit kscpinfo.com. You'll see research reports, fact sheets, presentations, and the latest videos. It's all free, and you can even subscribe to email alerts to stay on top of the latest news. You can also call 1-800-RedChip to speak to a specialist if you have any questions. We also have a free weekly newsletter you can subscribe to at redchip.com, featuring emerging growth companies like Knightscope. Now, let's move on to our next interview today with Alliance Entertainment. Hello, today we have Bruce Ogilvie, the Executive Chairman of Alliance Entertainment, trading on the NASDAQ under the ticker AENT. Bruce, welcome back.
Thanks. Good to be with you again.
For those new to Alliance Entertainment, Bruce, could you provide an overview of the company and how it has grown into the category leader for physical media distribution all over the world?
Yes. So in 1991, my partner, Jeff Walker, started a music store. And then I joined the company in 2001. And that time we were doing about $18 million a year in revenue from music store to wholesaling music to other independent music stores around the country. Fast forward to 2010, and we acquired a company that in the movies. And then 2018 went into video games, and then collectibles came in 2022, or earlier than that. And that led us to an acquisition we'll talk about later on called Handmade by Robots there. So fast forward, 2001, 18 million, all the way up to 1.4 billion in a 20-year time span.
Despite the rise of digital streaming, Alliance continues to thrive in physical media. Can you share your insights into the ongoing demand for physical formats, Bruce? And how are you capitalizing on the trend?
Yes, there's definitely headwinds in physical with all the digital opportunities for the consumers, which is very efficient. At the same time, it really helps promote those categories when it's an all-you-can-eat type of buffet of music or movies or video games. You can explore things without taking much financial risk. And then once you find something you really love and that you want to own, or you have a connection with the artist, then you make that next step where you want to physically own the product instead of renting your media. You can own your media like we all used to back in the 80s and 90s there. We have to, as a company, we have to take advantage of that and consumer needs and wants there, and deal with it as these big, huge multinational companies, and they have all this intellectual property of movies, music, and video games. As digital becomes more of a greater concentration of their business, we want to come in and step in and say, listen, we want to take over your physical distribution and license that content. And that'll allow us to be the last company standing to take advantage of that evolution and change. We don't believe physical media will ever go away. There's lots of many reasons there, as I talked about, consumers want to own versus rent. Versus they might have bandwidth issues. They're really big in collectibles. They think socially this is really better for the artist or the creator of the content. All those reasons will keep us around for a very long time there, and us to become the leaders of those categories.
Turning now to a recent acquisition you made, Handmade by Robots. This expanded your presence in the massive collectibles market. Elaborate on this one, Bruce. What is its strategic significance? How does it enhance your growth trajectory?
Yes, Handmade by Robots is a company that they had a form factor. Just think of it as a plastic mold or a model of a way to license IP from movies, music, video game companies there, or Netflix for particular TV series there. And it's very similar to what you see with Funko. Funko is a very successful company, does over $1 billion in revenue there. BDA, which is the company that owned Handmade by Robots, they just didn't have the expertise that we have in distributing to this mass retail, of reaching out to every online retailer and every marketplace in the world there. And that's where we step in there. And we saw this as a great opportunity. Okay, now we always want to take, when our business is good and our profits are strong, how do we diversify and leverage into something else to make us branch out and be better. And it's going to start off very small. We're hoping to do about $10 million this year, and within 2 years we can get it up to $100 million worth of revenue. But the sky's the limit for us. We have a fantastic form factor. If you get a chance, check it out. It's very well received in the marketplace. It's in the collectible space. You can't download collectibles. It can't go digitally. You have to physically buy the piece. And we're looking at the success of Funko, what they did right or what they did wrong, and we're hoping to follow behind them with our form factor and just license content that'll work through our ecosystem of movies, music, video games, or TV series.
There we are again with that idea of being able to hold something in your hand. Very interesting.
Yeah, tangible product, physical media, physical consumer goods. That's a way for us to diversify, take advantage of what we have, and bring in higher margin items that are become way more profitable for us.
Alliance is so cutting edge in so many ways, Bruce. For example, you've made significant investments in automation and efficiency technologies like AutoStore and SureSortX. How are these initiatives impacting your operations?
If you look year over year, you'll see that our fulfillment cost was running over 5%. And then now you can see that it's trending now below 4% there. And that's basically an investment in the automation that you mentioned there. That just makes us more efficient. In one of our operations there with AutoStore, and that's our vinyl area there, we have 41 processors or pickers that were walking around the warehouse picking the orders. And now we've been able to reduce that from 41 down to 7, in which we really eliminated is the travel time. Instead of the picker walking, the processor walking to the shelf comes to them. Within every 10 seconds, they can fulfill a line item on an order, and that just makes us way more efficiency. Same type of efficiencies we get with receiving, no more traveling to find an empty shelf. The empty shelf comes to the processor, they store the product, and it's available for sale. We can certainly add more and make more investment and do more automation in our thing. It's just a matter of CapEx dollars and finding the right time to implement those dollars. But so far, we're very happy with it because AutoStore is extremely scalable, as well as OPX.
All right, Bruce, to wrap up, talk now directly to our viewers. Tell them, what is the essential value proposition behind Alliance, and why should they take an interest right now?
Well, starting in 2001, we're doing $18 million, and we do all our acquisition. We grew by doing acquisitions. That's how we got to the size that we were. But it was all basically borrowing money and doing ABL type financing there. No private equity investment at all. And so 20 years to get to $1.4 billion, and now being a public company, we're in our second year anniversary is coming up February 10th that we become public. We've definitely got all the rookie mistakes as a public company behind us there. We're poised. We have 3-year financing in place. We're on an acquisition hunt right now. So hopefully we can double the size of the company in 5 years, what took us 20 years to do. That's the value proposition here.
And it is a good one, Bruce. Thanks for telling us your story.
You're very much welcome. Thank you for taking the time today.
To get more information on Alliance Entertainment, visit aentinfo.com. You'll see research reports, fact sheets, presentations, and the latest videos. It's all free, and you can even subscribe to email alerts to stay on top of the latest news. You can also call 1-800-RedChip to speak to a specialist if you have any questions. We also have a free weekly newsletter you can subscribe to at redchip.com, featuring emerging growth companies like Alliance Entertainment. Watch this show again and explore hundreds of small cap stock videos on RedChip's YouTube channel. Also, go to our website and sign up on our events page for the webinar series. We have webinars every week, several a week, in which we feature small public companies, mostly our client companies, and you'll hear straight from the CEO, and you'll be able to ask questions after that. Again, visit redchip.com and subscribe today. In addition to our newsletter, you can order Small Stocks, Big Money. This is a book written by RedChip's CEO, featuring interviews with some of the biggest players in the microcap space. Get a digital copy on Amazon for $18. Now let's recap the companies featured today. First, you met Knightscope Incorporated, KSCP on the NASDAQ. Knightscope is a public safety innovator headquartered in Silicon Valley on a long-term mission to make America the safest country in the world. Knightscope builds AI-driven technology to help protect lives, property, and infrastructure. Learn more at www.kscpinfo.com. redchip.com. Then you met Alliance Entertainment, AENT, on the NASDAQ. Alliance Entertainment is the global leader in physical media distribution, acting as the crucial gateway between major content producers and retailers. The company partners with nearly every major film studio, music label, and video game maker. Among them Disney, Sony, Universal, Warner Brothers, Universal Music, Sony Music, Warner Music, Microsoft, and Nintendo to distribute their products to retailers worldwide. Learn more at www.aentinfo.com. Don't forget to check out our stocks page. It is the biggest small cap stock portal in the industry. It has every company listed on the NASDAQ or New York Stock Exchange with market caps of $2 billion and less. And it's categorized by industries. Watch this show again and explore hundreds of small cap stock videos on RedChip's YouTube channel. And be sure to sign up for our weekly newsletter and learn about a lot of small cap companies. Also, go to our website and sign up on our events page for the webinar series. We have webinars every week, several a week, in which we feature small public companies, mostly client companies, and you'll hear straight from the CEO, and you'll be able to ask questions after that. Again, if you have any questions about any of our public companies featured on today's show, call us at 1-800-REDCHIP or email us at info@redchip.com. In closing, remember, while small caps can provide significant gains, you must be prepared for the downside. Small cap stocks are among the most volatile of asset classes. Some of the companies featured on this show are RedChip client companies, and we may own stock in these companies, so please always read our disclosures at redchip.com. Thanks for being with us today. We'll see you next week with some new, exciting emerging growth companies.